Are you an international business, tax professional, investor, or financial advisor seeking to optimize your tax position in Cyprus? Understanding the nuances of the Special Defence Contribution, SDC, and corporate taxation is crucial for effective financial planning and legal compliance. The Special Defence Contribution, SDC, is a tax levied on specific types of passive income for Cyprus tax residents who are also domiciled in Cyprus. It's essential to differentiate between domiciled and non-domiciled individuals, as non-domiciled individuals are exempt from SDC, making Cyprus an attractive jurisdiction for international investors. This distinction is a cornerstone of Cyprus's tax strategy. The SDC applies to several key income types: dividends, interest income, and rental income. Dividends are taxed at 17% for domiciled individuals, while interest income faces a 30% tax rate, except for interest derived from ordinary business activities. Rental income is taxed at 3% on 75% of the gross rental income. Consider Cyprus Tech Holdings Ltd, a holding company navigating SDC obligations. For dividends distributed to non-domiciled shareholders, no SDC is applicable. However, domiciled shareholders are subject to the 17% SDC rate. Interest income from the company's core business operations is exempt, but passive interest income, such as that from fixed deposits, is taxed at 30%. If Cyprus Tech Holdings Ltd owns rental properties, it must pay SDC at 3% on 75% of the gross rental income. Strategic financial planning is essential to minimize these tax liabilities while remaining fully compliant with Cypriot law. The Deemed Dividend Distribution (DDD) rule is a critical aspect of Cyprus tax law. It applies when Cyprus tax resident companies fail to distribute at least 70% of their after-tax profits within 2 years from the end of the tax year in which the profits were earned. In such cases, the undistributed portion is treated as if it were distributed as dividends, triggering a 17% SDC on behalf of domiciled shareholders. However, there are exemptions. Profits attributable to non-domiciled or non-resident shareholders are exempt from DDD. Additionally, profits arising during corporate reorganizations are also exempt, providing opportunities for strategic tax planning. In addition to SDC, deemed dividends are subject to a 2.65% General Healthcare Scheme (GHS) contribution for Cyprus tax resident individuals, regardless of domicile status. This further underscores the importance of timely dividend distributions to manage tax obligations effectively. For Cyprus Tech Holdings Ltd, undistributed profits from 2022 must be distributed by the end of 2024 to avoid DDD. Non-domiciled shareholders are exempt, reducing the company's overall SDC liability. Compliance is ensured by declaring dividends within the 2-year timeframe. Cyprus offers SDC exemptions for specific transactions related to corporate restructuring, including loan write-offs and property transfers. Loan forgiveness as part of a restructuring scheme is exempt from SDC. Transfers of immovable property during restructuring are also exempt from SDC, capital gains tax, and transfer fees. When Cyprus Tech Holdings Ltd undergoes a restructuring process, transferring properties to settle debts, these transfers are exempt from SDC, reducing the tax burden. Loan write-offs as part of the restructuring are also exempt, ensuring the company's financial stability. To minimize SDC liability, consider the following strategies. Leverage non-domiciled shareholders to reduce SDC on dividends and other passive income. Ensure timely dividend distributions to avoid DDD and associated SDC liability. Utilize restructuring-related exemptions to minimize SDC on property transfers and loan write-offs. By strategically employing these methods, international businesses can optimize their tax position in Cyprus, enhancing financial performance and ensuring compliance. The Special Defence Contribution (SDC) and Deemed Dividend Distribution (DDD) rules are vital components of Cyprus's tax system. By understanding and leveraging exemptions for non-domiciled shareholders, adhering to dividend distribution timelines, and utilising restructuring-related exemptions, companies can significantly reduce their SDC liability. Ready to optimise your tax strategy in Cyprus? Contact us today for a comprehensive consultation. Let our expert financial advisors and tax professionals guide you through the complexities of Cypriot tax law, ensuring compliance and maximising your financial benefits. Don't miss out on the opportunities Cyprus offers. Take action now.